Hi, folks. Dan Bird here on Wednesday, September 11th, 23 years since the terrorist attacks. May we never forget what happened on that day. I'm going to do a very quick midweek update because today was CPI day. So let me share my screen and show you what happened. This is my website if you're interested in getting the weekly newsletter. It's right here, breakpointtrading.net. And just click on that and you can download the newsletter each week. Let me jump into first CPI, and then I want to show you something very interesting. So on the charts page, CPI is down here under economic charts, CPI headline. And as I said, CPI was likely going to drop significantly. The forecast was 2.6. Let me turn on my little cursor here. So forecast was 2.6. It actually came in at 2.5. So I thought it would come in at 2.7 or 2.6. I did not expect 2.5. So that's much lower than expected. And after the market digested that in the morning, at first, it didn't really like it, but then the market took off and it was an accumulation day today. I'm going to show you what I mean here in a minute. But that is a significant drop down to 2.5. I had been saying for quite a while that by September or October, we would be 2.5 or below. As you can see up here, here's the 12-month base effect in this blue box. This is today's CPI. This is the one that dropped off. So that's the 12-month window. When a big one drops off, it helps CPI on the front end. You can see what's going to happen in October. Another big one's going to drop off. This could very easily get to 2.2, 2.3. I'm not sure what the market's going to do with that. It's certainly heading towards the 2% that the Fed wants, but could it be heading towards deflation like we had for the 1-month rate of change right here? You can see core held steady at 3.2. It actually came in at 3.27, so a little bit higher than that, but rounded down to 3.2. And you can see that the forecast was 2.6. Even though they said 2.5, it actually came in at 2.59. So you might as well say 2.6, but they round down for some reason, so they're calling it 2.5. So that's where we are with CPI, with inflation. As I suspected it was going to come down, it will come down again next month. And then we're going to get a leveling off the month after that, maybe even a tick higher before it starts to go down again for a couple of months. And there's another big one over here in January. That'll be the two big ones, actually. That'll be sometime next year, February and March timeframe. And three big ones, actually, now that I'm looking at it. There's three big ones that are going to drop off through here. So we definitely could be in a deflationary spiral by the time we get into the beginning of next year. And that, I think, will spook the market next year. We're not there yet. I think today was an accumulation day. And next week, the Fed will likely cut because of this. I think they will definitely probably cut only a quarter point. The market will likely like that. Those are the two of the four things that I had talked about before that might be catalysts to send the market higher rather than lower that like it normally does in September. At first, I thought September was going to kind of follow through with what it usually does. Even this morning, it looked like it was going to continue down, but it rallies significantly. So let me show you that. Back to my website, if I go to the market bias matrix, and for those that are subscribers, I recommend just going here at the end of the day after the close and just take a look at this overall trend right over here, this black box right here. This will tell you all you need to know about what's happening with the market. This showed you right here where we peaked back in July. It started heading down. In July, had a big sell-off all the way down to the bottom. It showed you where we hit the bottom and actually had a double bottom right there, right in the beginning of August. We had a nice rally back up, and now look what's happening right now. just today, actually. These are daily. I update this every day. So every day these trends will appear. You can see we had a lot of red. Now we're hitting yellow. And as I'm going to show you in a second, we very well could be in the green very shortly. So on the left over here, this is made up of indexes, sectors, industry groups, relative charts. So, you know, how the discretionary versus staples, NASDAQ versus the S&P, et cetera. Commodities, metals, and currencies. Some of these are counter trend indicators, but that's okay because in general, it's going to help us understand what the overall market is doing. So I do this every day, and it gives me a sense for what's happening and actually what's coming. What you'll notice here for today is there is one red one, which means it changed from bull to bear today. That was the Russell 2000. You can actually click over here on the IWM, that's the Russell, and it will give you the chart. And you see right here where the 21-day went below the 50. So that's the one down day, but all the rest were green. It's a green one here for discretionary, two green ones here for software. So software had both a short-term and a medium-term up signal. And then this is clean energy, also had an up signal. So we've got a lot more green boxes than we do red. That's a good thing. And let me show you what I do every day to take a look at what's going on. We'll start up here with the S&P. And I'm going to go through this very quickly, but I just want you to watch this right-hand side. Just get a sense for what all of these are doing. Even if they haven't given a signal yet, meaning they haven't quite got a box, a green box in this case, the green box will happen when this pink line crosses the blue. We only probably need one more day for that to happen. But just watch as I click through each of these, watch what all of these look like, and it will give you a sense for what's going on with the market. So there's the S&P, there's the NASDAQ, there's the Dow Jones. Notice how it sold off, all three of these. Go back a little bit. Sold off in the morning, all the way down, and then came all the way back up again. S&P, same thing, sold all the way down in the morning, came all the way back up in the afternoon. So I'm going to go through all of these. Here's the Dow. There's the NASDAQ 100. There's the S&P 100. There's mid caps starting to recover. Here's small caps. This looks very similar. They all look the same. Big sell-off and then a big rally back up. There's the New York, the NYSE. Here's the Russell 2000. Growth, value, and growth and value often go in opposite directions, but they both look the same today. Here's transportation. Transportation had a huge sell-off in the morning and came all the way back and ended right where it started. Here's utilities. That's a defensive sector. Technology, huge gain in technology. Here's the communication services. Discretionary looks great. There's staples, usually a defensive sector. So it did the same, even though it ended lower, but it's a defensive sector. There's utilities, usually defensive. There's healthcare, usually defensive. Same, looks the same. Energy had a sell-off. So energy continues to go down. Materials, look at that. Big sell-off in the morning, all the way back, and actually ended with a gain. Industrials, the same thing. There's financials, real estate, which has had a great run for quite a while now. Then we go to retail. Retail has been selling off for quite a while, but it had a little bit of a rally today. There's the semiconductors, huge rally right there. Here's software that I mentioned before, had both a short-term and a medium-term up signal right there. Nice big up candle. Here's clean energy. Big up candle. There's artificial intelligence, cloud, autonomous vehicles. All of these look very similar. There's cybersecurity. There's biotech. Here's home construction. Here's transportation. Here's insurance. Insurance actually a little bit weaker, but it has a similar candle. Came back in the afternoon. Banks actually gave a short-term down signal. So they actually ended lower today, even though it went down, it came back up again. And regional banks, the same thing, looks exactly the same. Here's the relative charts. So this is discretionary versus staples. So that means discretionary outperforms staples. That is very bullish, very aggressive. And notice how close the pink line is to the blue line. So this is going to give a short-term up signal in the next couple of days. There's NASDAQ versus the S&P. This is transportation versus the Dow, transportation versus utilities. Both of those are pretty far down. Here's growth versus value. And you can see how aggressive it is. Again, when this pink one crosses the blue one right there, it's going to give a short-term up signal. So here's Magnificent Seven versus the Russell 2000. Here's large cap versus, this is growth versus value. Large cap growth versus large cap value. Mid cap growth versus value. Small cap growth versus value. All of these are very close to giving a short-term up signal. Here's a CRB, which is continuing to go down. So this is one of the counter trend moves. These are commodities. Here's oil. These are also counter trend components. Oil. Here's light crude. Still down. Had a little rally today. Here's Brent. Has the same thing. Here's gasoline. Very low. Had a little bit of a rally. Here's natural gas. Actually just got a short-term up signal today. There's agriculture. Looking great. Corn, which has been terrible, trying to make a comeback. Soybeans also been terrible. Cotton, same thing, starting to make a comeback as well. For those that want to trade commodities, there's lumber. Lumber again went up, came back down. It looks like it's making all these commodities look like they're making higher lows. And then gold, still staying up there. Gold miners. Looks the same, similar. So that had a nice rally today. Here's silver. Silver miners. Here's steel. Steel has had a terrible run. And it has a similar candle today, but it's still pretty far down. So we'll see if that can rally. Copper, again, making a higher low. Here's lithium. It's had a terrible chart, but it made a really nice comeback today. Up 7.5% today. Here's uranium. Also really big uptrend, up 5% today. Here's metals and mining. US dollar making a comeback, making a higher low. Here's Bitcoin, same thing, trying to make a comeback. Looks like a double bottom, possibly. We'll see if that can continue. 10-year treasury continuing to go down. So that's also a counter trend move. Here's bonds continuing to rally and go up. But what I would say about bonds is buy the dip, BTFD, buy the frickin' dip. So when it goes down and dips down to the 21-day, buy some more. I think bonds are going to do well next year. Here's the inverted yield curve. Interestingly, it's right on the verge of going back below zero again. So it might again invert. It hasn't yet, but it's only 0.01 above the zero line. So it's very close to re-inverting. And then the 2-year minus the 3-year. So that's all of those charts. And if I go back and show you again, you notice how close so many of these, the ones that are red over here in the left-hand column, this is the short term. That's the pink crossing the blue. A lot of these are going to start to turn green in the next few days. So it's going to push this chart over here continually higher. And then we'll have to see if it can take out the highs from over here and continue above that. So if you do nothing else but look at this black chart right here, you can see that the orange one is the short-term signal, the gray is the medium-term, yellow is the long-term Long-term has been in a very slow decline. It's the last one to react, actually. You can see that the short-term signal is putting in a higher low as well. So a lot of these over here in the left column are going to start changing from red to green very shortly. And you're going to see this start to spike higher and see this orange line spike higher as well. So that's what I expect to see happening in the next few days, actually, maybe by the end of this week. And the next week, of course, we have the Fed meeting. So if we look at the Magnificent Seven very quickly, can do the same thing and walk through each of these. You can see that this is the pink crossing the blue is the short-term signal, the blue crossing, the 21 crossing the 50 is the medium term, and then the 50 crossing the 200, which is quite a ways away, is the long-term signal. So this is Google, still heading down, but starting, maybe getting ready to come back. Amazon had a great day today, just chopping sideways, and now it's starting to take off. Here's Apple. Didn't show much today, but trying to get above its 21-day moving average. Might very soon get a medium-term up signal. Here's Meta, looks the same. Here's Microsoft. Microsoft had a pretty good day today and very close, not quite there, but very close to getting a short-term up signal, probably tomorrow. NVIDIA had a great day today. It looks like NVIDIA is starting to make a comeback. It's now put in a higher low. It's above its 21-day moving average, closed there today. Had a really nice rally day today. So NVIDIA, I think, might be on the comeback trail. Tesla, same thing. Tesla sold off in the morning, ended above the 50-day moving average, which is very positive for Tesla. Here's Netflix, same thing, big green candle. AMD, same thing, big green candle, trying to make a comeback, making a higher low. Not quite above the 50-day and certainly not above the 200-day yet, but it looks like it's starting to rally. SMCI, which has had a terrible run, it actually had a long-term down signal right there. It's trying to rally. We have to see if we can get back above this 21-day. It got rejected right there. So we'll see what happens. It is not putting in a higher low yet. It's still putting in lower lows right now. Oracle has had a great run. Oracle had great earnings right there. You can see the short-term up signal was way back here, then confirmed with the medium term, confirmed here with the MACD. So anywhere in this area right here would have been a good time, good entry for Oracle before earnings. And then Palantir, same thing. Palantir had a great run right through here and is still in a great uptrend. So the last thing I want to do is show a couple of charts that people asked me about. One was KLAC. So we're using the same kind of chart format. KLAC is in the semiconductor space. Semiconductors looks like they're trying to rally again, putting in a double bottom right here. So that could be a positive sign. The momentum indicators are still negative, so they haven't confirmed the uptrend, but nice candles today. I'd like to see it get above its 21-day moving average. It's still below the 50. So it's got a lot of work to do, and it's got to get through this resistance up here at 820. But if I were to make an entry, I'd be putting in a stop down here at about 700. Right now, it closed today at 748, but up almost 5%. So looks like it's trying to make a comeback. We'll see if that will continue. The other one was Chevron. So as I showed you before, energy has had a terrible run. Chevron looks the same. So you can see here, it crossed over into negative territory right here, and it's still red, still in the red zone. Went below its 200, went below its 50-day, actually back here, went below the 50-day in through here, tried to rally and got rejected, got above it briefly, twice, and then fell back below the 50-day, then fell below the 200-day, and then the 21 fell below the 200, and then the 50 fell below the 200. That's a long-term down signal. And then today's candle was red, so it's continuing to sell off. Energy in general has just not been a very good place to be right now. So this is definitely not a very good looking chart. If we look at Investors Business Daily Style, you can see that it's right at a support line, right down here at 135. So that's likely the place it will probably bounce. But the RS line, this is what IBD, anybody that follows IBD, this is what they use for their RS, relative strength, continuing to go lower. And the accumulation distribution line is continuing to go lower. So that's showing distribution, not accumulation. But things don't go straight down like that. It will get a reaction rally. So it probably will bounce right around here at 135, which is support. But it's got a lot of work to do to get through its 21-day, its 50-day, its 200-day, get through all of those levels to do any good to get back higher. So I don't like the looks of this one. This is the weekly chart over 3 years. So again, you can pretty much see where the support line is, and right above the 200 week, that's a 200 week moving average right there, which is at 149. Let's call it 150. So 150 should be major support. So we'll see if it can, I'm sorry, 131. 200 days, 131 right there. So 131 should be major support. Right now it's at 137, 138, let's call it. So it doesn't have far to go to hit there. So I would expect to see it 131 to 135, like I mentioned before, somewhere in that neighborhood. Probably will bounce and make it back up to 150. So that's what I think about Chevron. All right, that's it for now. Big accumulation day in the market. So we'll see if it can follow through tomorrow, but things look pretty positive. Next week is the Fed meeting that probably will lower rates. I think it'll be a 1/4 point, and the market probably will like that. And then we still have the rest of September and October to get through, but these could be positive catalysts for the market. Everything looks like it's starting to move higher. All right. Thanks for watching. Give me your comments down below, or any other stocks you want me to look at the next time. Be happy to do that. And if you are interested in getting the free newsletter or any of the content on the website, just go to breakpointtrading.net. You can register your email at the bottom of the homepage. For the $0, no credit card required. We don't share emails, so you shouldn't get spam as a result. You can do a free trial by signing up for the monthly, or you can get all the content that's on here for $99 for a year. So thanks, everyone. Hopefully we'll be talking again on Sunday with Mr. Zuber, and hope everyone has good trading. Take care.